Hello traders and investors, welcome back to the Trend Trader channel. In today's video, I want us to talk about oil. We know that oil is in the energy sector. As you can see, there are a lot of headlines regarding oil. People are coming with different things regarding oil. Some are talking about oil prices based on Russia, other things are based on OPEC. But as you know, whenever we talk about something in this channel, we always look at the chart. So the oil that we're going to be looking at is Brent crude. If you go to TradingView, Brent crude is UK oil. So this is the oil that we normally use. Other people use WTI, which is the Western Texas oil, but that oil is mostly used in the US, or it's the price of oil that is produced in the US. Brent crude is the oil that we normally use in South Africa, and that is why we are always looking at Brent crude oil. So when you're looking at Brent crude, you can easily see that the price of oil has been on a downtrend. There was this what was supposed to be a support level, but as you can clearly see, the price of oil has broken down below this level. So there's also this level, this support level coincided with that previous resistance level, which was broken somewhere beginning of 2020. So looking at this, we can see that Brent crude is already trading below $85 per barrel. So the next potential support level is somewhere around this line, which is just near $70 per barrel. We are not predicting that the price of Brent crude is going to fall to about $70 per barrel, but as you can see, the current oil price is already trading below that support level. So at this moment, we won't be surprised if the price of Brent crude it continue to trade lower. And once the price of Brent crude starts to trade lower, there are things that can be affected. One of the things that is affected by the price of oil, and it is a security where we had a position, is the energy ETF. So there are plenty of energy ETFs, but the one that we were trading is the XLE ETF that is coming from SPDR. So what we see here, when the price of oil was falling, XLE still managed to continue to go up. We saw it attempt to trade above $80 or $90 per share or per ETF, because this is it's an ETF. But now you can see that there's that weakness. Our stop was just somewhere around 85.30. So our stop loss has been triggered. At the moment, we don't have a position on XLE, but remember, we also noted that the oil weakness is there, so we won't be surprised if the share price or the price of this ETF continues to go down, despite the price moving up while the price of oil was falling. So we normally look at the companies that are within the ETF to see how some of those companies can perform or how they are performing. So we had a position on Exxon Mobil. It's also a position that has recently hit our stop loss. As you can see, the price quickly pulled back here, where our stop loss was just somewhere around $105 per share. Again, we were expecting Exxon Mobil to continue to trade above this level, but then that trade quickly turned negative. So at this moment, we don't have a position. We can see here that we want to see if Exxon Mobil is going to find support level around $100. So if it continues to trade lower, maybe it can bounce off there. But even if it bounces there, we won't be quick to buy Exxon Mobil shares. Those people that saw our Tungela video, we noted that once security, in this case we are talking about Exxon Mobil, but it is the same thing that we noted with Tungela. Once Exxon Mobil come back to $100 per share, we won't be quick. Even if we see that the share price it finds support and then it tries to trade high, we're only going to consider buying Exxon Mobil once it break above this level, because that is what is going to tell us that the price of Exxon Mobil is going up. The reason for that is because it's possible that the share price can come back, reach this level and come back, and then it keeps on playing around this support and resistance. In that case, we won't be making money as long as the price keeps on bouncing up and down there. And also the worst case scenario is that Exxon Mobil fails to find support here. It breaks below this level, maybe it come back to retest this level, and then it continues to trade lower. So we don't want to participate in this scenario. So at the moment we are sitting on the sidelines. We don't have a position on Exxon Mobil. Also, for South African investors, we know some people they have interest in Sasol, so we haven't had Sasol in our portfolio for quite some time now. Reason is simple: Sasol was very clear from the beginning. Sasol was on a downtrend, so we didn't have a reason to hold Sasol. The last time we bought Sasol is when it attempted to trade above 400 Rand per share, and then that move quickly failed. As you can see, the stock just shot up on that week, and then it closed lower. It closed in red. Then the following week, because our stop loss was somewhere here, it triggered our stop loss. So since around June 2022, we haven't had the Sasol position in our portfolio. So that has worked well for us, because we saw that Sasol continued to trade lower, coming back to the previous resistance level, which was broken again early 2022. So for quite some time, Sasol consolidated above 300 Rand per share, but as the oil weakness continued, we saw that Sasol then it broke above, it broke below this level. So now we are looking at this support level somewhere around 240 Rand per share. Once again, we're not predicting that Sasol is going to fall to 240. We just don't have a position. Also, if that happens, at least we won't have a position in there, so we won't have anything to worry about. But then should Sasol fall to that level around 240, 250, then we can see maybe if it find a support, it tries to bounce in there. But if it does bounce, chances are it can come back to this previous support level, meaning that it can bounce them, and then we are waiting to see if it will break above this level, or if it's going to find resistance and then come back to this level. Once again, we don't have time to sit for a stock while it is bouncing up and down. We understand that some of these companies can be paying dividends while they are bouncing up and down, but for us, as traders, we just want a stock. It should be clear. If it's moving up, it should move up, then we make money. If we are short that particular company and it is moving down, then there's a possibility for making money there. But that's if you are using a broker where you are able to short. So in summary, we see that there is oil weakness. We are not interested in oil because of that weakness. The XLE ETF, which we bought in the US, was also triggered our stop loss as it retraced. We had an Exxon Mobil position which has also triggered a stop loss, so we no longer have a position in that sector at the moment. And also we've been bearish on Sasol for a while, so we don't see any sign of strength at the moment. But that is from a trader's perspective. You know, investors and traders usually we see different things. Investors could see an opportunity to continue to pile up these shares. So do whatever that fits your investing or trading strategy. Our strategy at this moment, it is telling us to stay on the sidelines. So that's it that I wanted to share with you today. If you have any questions, comments or suggestions, please leave them in the comment section. We will respond to all of those. And those people who haven't subscribed, please consider subscribing. And if you found value in this video, please make sure that you smash that like button. We will see you on the next video.